Fed expected to take dovish stance in 2024 with over 100 basis points of cuts. Disclosure: crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. By using this website, you agree to our terms and conditions. We may utilize affiliate links within our content and receive commission. The U.S. Federal Reserve is likely to adopt a dovish monetary policy stance in 2024, according to projections published by Deutsche Bank on Monday. Analysts predict the Fed will cut interest rates by at least 100 basis points from current levels of around 50% easing policy as inflation rate descends. ING expects the Fed to ease policy next year as economic growth and inflation rates decelerate. The central bank aggressively hiked rates over the past year to combat surging consumer prices. With inflation expected to moderate, the Fed will have the capacity to cut rates and support the economy. The accommodative stance would weaken the U.S. dollar, providing a tailwind for risk assets like stocks and cryptocurrencies. The dollar tends to decline when the Fed adopts a dovish stance, incentivizing investors to move into higher-yielding assets. IMG equals https://itim.com/roman6/id/hq default. JPG alt equals with equals 480 height equals 360 ethereum title equals what Wall Street thinks of Fed interest rates for 2024 with equals 640 height equals 360 src equals https://www.youtube.com/embed/x6tape feature equals own frame border equals 0 allow equals accelerometer autoplay clipboard write encrypted media gyroscope picture-in-picture web share allow full screen /iframe. The Fed is forecasted to deliver the biggest rate cuts in 2024. Traders are betting on a decline of at least 100 basis points from this year's peak levels, according to Deutsche Bank research. Other central banks like the Bank of England and European Central Bank are also likely to cut rates, but less aggressively than the Fed. The expected policy easing comes after the Fed raised its benchmark rate from near zero in March 2022 to a current range of over 5.25% to 5%. Fed's monetary policy pivot to support growth. Economists widely expect inflation to continue descending as supply chain pressures ease and demand moderates. Lower inflation will enable the Fed to pivot toward supporting economic growth and employment rather than solely focusing on price stability. While the base case is for Fed rate cuts and dollar weakness, risks are still present. Any reacceleration in inflation would force the Fed to reconsider easing policy. Analysts also point to potential shocks like higher oil prices, slower Chinese growth, or stronger U.S. economic data as threats to expectations for a weaker dollar. For now, traders are pricing in a dovish shift by the Federal Reserve in 2024. As the most influential central bank globally, the Fed's monetary policy stance often sets the tone for risk sentiment and asset prices worldwide. The projected easing cycle presents a constructive backdrop for stocks and cryptocurrencies next year. Enter your email for our free daily newsletter, a quick 3-minute read about today's crypto news. Sign up IMG equals https://simg.co/p/ml300 JPEG alt equals image class equals imgid equals newsletter pop-up img.